Hello and welcome to the program. I'm Will Ibang. First things first, as always, we check in with the market, starting with Africa, where the NGX ended the final trading day of the year in the green very strongly with triple digits gain. It was up 1.89% to close. And then South Africa's NGX was down 0.75%. Meanwhile, Egypt's EGX closed Thursday's session in the was in the green. It was up 0.14%. Kenya closed Thursday session down 0.84%. Over to the Middle East, where major equities were closed on Thursday, except in the UAE, where sentiments were mixed at intraday. The Abu Dhabi was down 0.32%, while Dubai's index was up 0.11%. Saudi and Qatari indexes were closed on Thursday in negative territory. Now, sales of fireworks returned to Germany on Thursday following 2 years of prohibition due to pandemic measures. Specialty retailers say they're hoping the coming days' sales will make up for the pause. But not everyone is excited. However, Stephen Beersley joins me from Berlin with updates. Stephen, this is a big deal for some people and businesses, isn't it?
Yeah, that's right. Here in Germany alone, the sales of private fireworks have risen to more than 100 million euros a year in recent years. So it is a big business. Now, that was all brought to a halt more or less for the past 2 years. Those firework bans, part of a raft of COVID measures. In this case, the particular concern was about hospital admissions, with nurses and doctors being overwhelmed as it was by COVID patients. They lacked the capacity to essentially sew fingers back on in many cases and deal with other injuries that were likely to come in via fireworks. That was the reasoning, at least. Also, this was a time period in which there were very few public celebrations and public parties essentially that were allowed, and that meant that there wasn't going to be the kind of group setting for these fireworks anyways. Now, that didn't stop people from getting fireworks. They have other ways of getting them, but the displays of the past 2 years have been somewhat subdued. Now, this year, we're already seeing that things could be a lot louder. We've seen long lines at these fireworks specialty shops. We've seen a lot of pre-orders as well. And analysts say that actually this could be very comparable to the last time there was fireworks sales back in 2019. They're predicting 120 million euros in sales of private fireworks compared to 130 million in sales for 2019. So almost at that same level. And the industry, for the industry, this is huge. The industry says that 90% of its sales for the year take place in these 3 days around New Year's Eve. So you can see how critical this time period is for them right now.
So why are others less enthusiastic about the return of the fireworks sales?
Well, again, injuries are really one of the main reasons. Every year we do see cases of people losing fingers, adults and children, because of fireworks that were detonated improperly or that went wrong somehow. But there are other reasons as well. It's a lot of work for police and firefighters. And then others say that there are environmental reasons that it's problematic. There's a lot of fine particles that are released into the air in city centers where there's a lot of fireworks released. Anyone notices that when they come outside the next morning. There's also the litter that it creates. Not all of it biodegrades as fast as possible. And so those are concerns that you hear more and more here in Germany. But really probably one of the biggest is just the disturbance factor. This is a very loud time of year. It's a very loud evening. And it's very chaotic in a way that you might not expect here otherwise. A lot of revelers are really given free rein to just sort of fire off as they want. And for people who don't want to celebrate in that way, it becomes even dangerous sometimes as bottle rockets fly horizontal instead of vertically. It's loud. That's a problem for kids, for those who have animals. And some people just say it's gone too crazy. I had a neighbor who a couple of years ago had the windows of his ground level apartment shattered out because someone put a larger than normal essentially kind of firecracker or firebomb in a dumpster nearby. So even when they're not the legal kind, people find these much bigger versions, whether they're homemade or whether they've been obtained through other means. And that's sort of imprinted itself in the public mind here. And polls actually show that there are large numbers of people who wouldn't mind seeing a prohibition of fireworks sales for the duration that continues on. But for now, we're not seeing that. There are some city centers, for example, in Hamburg, that have prohibited fireworks again this year. And it sounds like you're not going to hear too many complaints about that. But here in Berlin, we're definitely seeing that a lot of people are excited about it.
I know, Stephen, as much as we want to have fun, safety is very important. So it's the final trading day of the year. What are we expecting from the markets?
Well, it's the last trading day of the year, and everything started out in negative territory. Keep in mind, however, that the volumes being traded are likely to be much lower today, as they have been this week compared to other weeks in general. Not only have many major investors already put their orders in, but there's not a whole lot going on in terms of numbers out there, in terms of things that are making such an impression. We did have some reaction from Asian markets, and we're seeing that probably still in European markets later today to these latest jobless claim numbers from the U.S. Those were generally positive for investors because they showed that first-time jobless claims ticked up in the U.S. That doesn't sound like it's good, but it means that, or investors hope that it means that the Fed will consider slowing the rate of its interest, the pace of its interest rate hikes as the economy shows signs of slowing down, and that's ultimately good for businesses who rely on cheaper borrowed money for their bottom line. So investors watching that. Otherwise, it's poised to be a quiet day, keeping an eye on China as always, and guesses about where the economy could go there based on COVID sickness rates. That's one of the other big things going on this week.
Thanks so much, Stephen Beardsley, for the update, and we look forward to the new year. Now to other markets where stocks in Asia Pacific traded higher on its last trading session of the year after Wall Street rebounded overnight, recovering most losses from the previous day. Hong Kong's Hang Seng Index rose 0.52% in its final hour of trade, carrying on the sentiment from the U.S. session. In mainland China, the Shanghai Composite gained 0.6%. The S&P ASX 200 in Australia rose 0.26% to end its session at 7,038 points. In Japan, the Nikkei 225 was flat to end at 26,000 points, while the Kospi in South Korea was closed. Oil prices edged up early on Friday and were on track to post a second straight annual gain, a bit meager one, in a year marked by tight supplies due to the Ukraine conflict, a strong dollar, and weak demand from the world's top crude importer, China. Brent crude futures climbed 0.5% to $83.90 a barrel after settling 1.2% down in the previous session. U.S. West Texas Intermediate crude was at $78.88 a barrel, up 48 cents after closing 0.7% lower on Thursday. Brent is set to close 2022 with a 5.76% gain after rising 50.2% in 2021. The West Texas Intermediate is on track to rise 4.5% in 2022, following a 55% gain last year. And gold prices firmed on Friday, but were headed for a second straight yearly loss as aggressive rate hikes by the U.S. Federal Reserve dented the non-yielding bullion's appeal. Spot gold was up 0.2%. As of U.S. gold futures fell 0.1%. Gold is headed for an annual decline of 0.6% as the dollar emerged as the preferred safe haven asset amid the Fed's hefty interest rate hikes. Spot silver rose 0.4%. Platinum was flat at $1,054, and palladium was little changed at $1,814. Silver and platinum were both headed for a yearly rise, while palladium was headed for an annual decline of 4%. Now, over recent months, sets of sturdy, brightly branded swapping stations have cropped up around Kenya's capital, Nairobi, allowing electric motorcyclists to exchange their low battery for full charged one. It's a sign of an electric motorcycle revolution starting to unfold in Kenya, when combustion engine motorbikes are a cheaper and quicker way to get around than cars, but environmental experts say are 10 times more polluting.
East Africa's biggest economy is betting on electric-powered motorcycles. Its renewables-led power supply and position as a technology and startup hub to lead the region's shift to zero-emission electric mobility. The battery swapping system not only saves time, essential for Kenya's more than 1 million motorcyclists, most of whom use the bikes commercially, but also saves buyers money as many sellers follow a model in which they retain ownership of the battery, the bike's most expensive part.
Financial sense to the riders is that they have to, from the revenue they make, they have to save more, because that is the only way they can increase their income, is by reducing the operational costs. And that's how we started looking at electric two-wheelers. And unfortunately, what we could find in the market, and the market here being China, it was not really designed for the African market, and that is based on our experience from what we were able to order off the shelf to test. And to get a product that is able to meet our needs, we have had to go through three revisions, and this has given us a product that now meets all the needs for us as a business and also the end customer.
EcoBoda has 50 test electronic motorcycles on the road now and plans to have 1,000 by the end of 2023, which it sells for about $1,500 each, roughly the same price as combustion engine bikes, thanks to the exclusion of the battery from the cost. After the initial purchase, the electric motorcycle is cheaper to run than petrol-guzzling ones. Goods and passenger transporter Kevin Makaria says with the normal bike, he would use fuel worth about 700 to 800 Kenyan shillings each day. But with this bike, a battery swap costs 300 shillings. EcoBoda is just one of several Nairobi-based electric motorcycle startups working to prove themselves in Kenya before eventually expanding in East Africa.
The sector's still really early. We're currently putting 120 bikes on the road. By the end of the year, we'll have 250 on the road with 700 e-bikes as well alongside them. So we'll be getting close to that 1,000 vehicles on the road point this year. Next year, we'll be building at least 6,000 to 7,000 electric bodas and also launching a personal commuter scooter product, which we're really excited about. We expect to do 3,000 to 4,000 of those as well for Nairobi. Also expanding into Kampala, Dar es Salaam will be similar numbers on the road. So we're really going to go from a few hundred vehicles in 2022 to 2024, us going up to tens of thousands of bikes, and also in the whole sector as a whole, probably going up to around 100,000 plus electric bikes on the road across Africa within the next 2 to 3 years.
The country's power utility estimates it generates enough to charge 2 million electric motorcycles a day. Electricity access in the country is over 75%, according to the World Bank, and even higher in Nairobi.
Developing economies are facing a $2.5 trillion debt shock, and Africa is on the front line. According to reports, sub-Saharan Africa's debt burden increased to a record $789 billion in 2021, the highest since 2010. And new research by Chatham House says Africa's debt distress may likely worsen in 2023. Joining me to review borrowings on the continent this year is Mr. Ayodeji Onigbogi, Managing Director, Escrow Capital, Escrow Wealth Investments. It's good to have you on the program.
Well, it's my pleasure being here.
Okay, Mr. Ayodeji, we've talked about Africa's debt burden. We've seen what's happening on the continent, especially in 2022, post-COVID-19 and Russia-Ukraine crisis, which has exacerbated things. How would you say major economies in Africa fared this year in terms of debt management versus their revenue generation?
The major economies in Africa that are leading: Nigeria, Egypt, South Africa, Morocco, and Algeria. They're the first 5. If you see what they did, the budget, what their loan portfolio is, and debt servicing, the 5 major countries, they've been able to manage their debt portfolio perfectly. But the issue is other smaller nations might not be able to manage their debt portfolio because their source of revenue is limited, and foreign direct investment in most of these countries have been withdrawn. So psychologically, funds are no longer in all these environments. But most of the first 5 major countries in Africa, they have been able to manage their debt portfolio perfectly. For Egypt and Morocco, they are the 2 leading countries whereby investment, they get more foreign direct investment because they have an economy that is stable, they have a government that is responsive and is attracting foreign direct investment.
If we talk of foreign direct investments, Nigeria's foreign direct investments have been on the decline for some time now.
Yeah.
And we have a debt stock of about 44 trillion naira. And the government is looking to securitize the Ways and Means loans, which is about 23 trillion naira. That's adding to the debt burden. Do you think we've been able to manage our debts? And do you think we have enough to sustain that debt?
Well, Nigeria as a country, we have enough, but it's management that's the key issue. If you check out the countries like Egypt and Morocco that are stable, that are attracting investors, they have stable economy. Nigeria is a place whereby if you bring your $2,000 to invest in Nigeria in 2021, by 2020 you don't know what the policy will look like. And anybody that wants to attract foreign direct investment, you must have a stable economy. Your regulations and policies must be stable. People must have the confidence, just like as we knew. Some 4 or 5 years ago, we bought Nigerian to dollar was probably 200, 250. Now it's almost 750. So that means if someone has brought its funds from a few years ago, if he has not repatriated, he might even have difficulty. We even had instances earlier this year where airlines were not able to repatriate their funds because they brought in people, they paid in naira, they were not able to move their funds in dollars because of the exchange risk. So that's a major problem for countries that is not stable, or countries that are not stable. Foreign exchange risk will be a major problem.
Okay, speaking of foreign exchange risk being a major problem, Nigeria, experts have said, we had Mr. Bisbak Rouhani saying that Nigeria is going to borrow more because of the way the economy is going. And if we're looking at the rising inflation and interest rate hikes by most major developed economies, which is increasing the cost of borrowing, making it more difficult to sustain, are we likely to see a liquidity crisis in most of these countries? Nigeria, we've seen something happening in Ghana. What of Egypt and Kenya and the rest of the economies that are depending on these debts, these loans from foreign countries?
Yeah, you mentioned something that's very important. See, a nation must have a vision. And the vision is not a 5-year plan. It's not a 10-year plan. It should be something that is tenured. Nigeria as a country, we have vision. We claim to have vision, but we don't follow through our vision. So psychologically, another 2-3 years, people should ready, there will be liquidity crunch in Nigeria. And the reason is because government will have less money to put into the system because the funds we have in the system will be limited, because we will have more reasons to use our fund that is coming to pay the external debt. And external debt is a must. Even if you don't eat, you need to pay your external debt. If not, the credit rating of the country will be at risk. So we need to fund that, and we are funding that. There will be less cash in the economy. When there's less cash in when the economy is not illiquid, that's when there's less cash in the economy, everybody will suffer the front. I will tell you, this December is one of the poorest December I've seen since I've been born over 50 years ago. It's the poorest, because if you notice in Nigeria, the general trend, what we are used to is that you see what we call ampers flying around. I never saw one.
Wow.
I never saw one. But you know what I mean?
Serious.
And that shows that there is a lot of liquidity crisis in the country, 2022. Next year is a political year. Between now and February, March, there will be a winner. And then some people will have to go to court. Before you know it, the year can still be huge. Because anybody that wants to bring in funds, you need to be sure that economy is stable for them to be able to, for it to be attractive enough for foreign investors.
So look at Ghana, what's happening there. Can you speak to what is happening? Do you think right now they're looking to January to get an approval, well, to get the funding for $3 billion? Do you think at the moment that Ghana is on the right track, that they're doing the right thing with the IMF funds?
Yeah, what happened in Ghana is naturally what will happen. People that brought in funds, because the economy was seen not to be, they are no longer confident with the economy. They moved the funds, and then there was problem. So that's what happens in Ghana. So what they are trying to do, it will be in the short run. Okay. There will be funds in the economy for what they want to do, but they need to consider long-term projections. Okay. So that people who don't enjoy now, and probably the people that are coming in the next 10 years suffers it.
Okay. So you're saying the outlook for Africa, what's the debt outlook for Africa? Just a quick one, sir.
Well, if you look at what the London business has said, what Africa owes about 693 billion. Africa needs to reduce what they owe to the outside world. Because what we even owe only China, Chinese bank, what African countries owe Chinese bank is 696 billion. So if you owe what we owe Chinese bank 696 billion, that shows we are not careful. African African future
Okay.
might be moribund or might be mortgaged by what we're doing.
Thank you.
We've had instances whereby people are cracking joke that we signed contract for our rail and it was not well read, and because most of the Chinese contract they have undertones,
Okay.
and we saw it happen somewhere in Angola and Zambia.
So, Mr. Adejo Nibogi, thank you so much, Managing Partner, Escrow Wealth Investment, for sharing your perspective, and probably there'll be more time for elaborations. Thank you so much for joining
It's my
us on
pleasure
Business
being on the
Incorporated.
program. Nice one.
And now on to other stories. Airports companies South Africa AXA says the challenges with refueling of aircraft impacted 41 flights at OR Tambo International Airport on Thursday. There was a technical issue with the main supply valve that provides fuel to the apron or the area where the aircraft is parked. This caused delays to domestic and international departures. A tanker was then used to refuel aircraft. AXA said that additional staff members have been deployed to assist passengers with queries, and that affected airlines and passengers have also been notified. Egypt has seen a spike in its energy reserves in 2022 with 53 new oil and gas discoveries, and that's according to a report by the country's Ministry of Petroleum and Mineral Resources. The new discoveries include 42 oil wells and 11 gas wells in the Western Desert, the Suez Gulf, the Mediterranean Sea, and the Nile Delta. Also, the total production of all petroleum products in Egypt reached 79.5 million tons during 2022. And that's it on Business Incorporated. To join us for another edition in the new year, I'm Will Ibang. Thanks for watching and bye for now.